Good morning and welcome to the Fractal Effects live stream. I'm the Fractal Trader. Please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors and this is not financial advice. We'll jump onto the charts in a minute. Today was PPI. So again, we will be, it's also FOMC, no, sorry, not FOMC. One second here. Then we have some more news dropping later in the afternoon. Fed Chair Powell speaks. That's going to be at 3 p.m. Eastern Standard. We have crude oil inventories that drop at 11. So we have to be careful. A lot of different news drops. I have oil up right now. We're staying away from the indices. And we're going to wait to see if we see another asset confirm. We're looking for the foreign pairs. And again, to be completely honest with you, today's one of those days where I would actually avoid the markets, but since we're doing specifically for educational purposes, I just want to go over a few things. We're just going to pretty much read the tape. Because oil, in literally 30 minutes, there's going to be a news drop that's going to affect oil. So if we get a confirmation now, there's no point in jumping in. But if we get a confirmation on one of our foreign pairs, a Forex, I'd be interested in possibly seeing if there's a high probability trade setup. But ideally, once you've learned everything and you're proficient, you want to avoid days like today. Crude oil inventories is going to affect oil. Obviously, your PPI and the Fed chair speaking, that's going to affect the indices, a majority of US related assets. Now, anytime Powell speaks in the afternoon, usually you'll see a lot of consolidation. We can even take a look at NAS real quick since we have no confirmation as of yet. You know, a lot of consolidation, a lot of back and forth. So the entire London session was a consolidation. Now a lot of back and forth price action. It's high resistance liquidity runs back and forth. Very similar to yesterday, actually. That's one of the reasons we avoid it. Today is Thursday. Thursday's footprint takes us back to the weekly range, which is marked out here in the aqua line. So New York did tap it, tapped low. But inevitably we'd like to end up somewhere in the middle there. On any other day, again, we could call that. But today, who knows how long it would take. Might drop a little further. It'll take its time to get up there. That's why we're going to avoid NAS. I'll leave it up here for now until we get another confirmation. Meanwhile, on the left here, oil, we have entered the weekly range, the aqua line. We're above previous days. Was that low or high? Sorry, let me just check. We're above previous day's high. And even though we are bearish on a higher time frame, 4-hour and daily, our 5, our 15 are green, and most likely our 1 will turn green. We do have a contraction model. I want to see how the crude oil inventories affects price action. So we have to wait till about 25 minutes. We do have a confirmation on GBP and ZD. It's the Great British Pound against the New Zealand dollar, which is a pair I believe we looked at either yesterday or on Monday. Sorry, on Tuesday. Let's just change this on the right. So this is considered a foreign pair. There is no US dollar attachment, any kind of attachment to US assets. So while we're waiting for a confirmation on oil, we'll just do a little bit of market analysis here. Slight downside, mostly nested. Same, slight downside, mostly nested. Now remember, a nested model is where you have the next model, next range forming within the last one, where your midpoints are roughly the same. So if you take the midpoint of Asia, just marked out right that goes right through. Usually a nested model. What we're looking at is mean reversion. We keep coming back, sweeping highs and lows, and keep coming back down to that same line. A very sloppy model, especially if you're looking for a directional bias. But again, our weekly range is down here in the aqua lines, and Thursday brings us usually back to the weekly range. So we'll see what kind of confirmation we get. We are bullish on the daily, bullish on the 1 and the 5, not on the 15. And it's setting up so there is, sorry, just looking for our New York fair value gap. These two are extended over from London and Asia. There's London's up there. There's Asia's down here. Oh, I believe that's it right there. It's so small that it's just a tiny little green line. So I'd like to see it come down. Tap our 20 and see what happens here. Given the fact that it is Thursday, we have a nested model, it could just as easily drop through. So until I see it touch the 20 EMA and we see some rejection, I'm not interested. We haven't had any early retracement. Oil, on the other hand, 47 seconds left. Let's see if we confirm bearish. So higher time frame, 4 hour and daily, we are bearish. 1 minute, we're red, but the 5 and the 15 have not turned yet. We're also above the 238, which is very bullish. We might even see it come down, hit the 61% and bounce back up. But as mentioned before, so even though we have our bearish confirmation now, we have news drop in 20 minutes. It's just one of those days. News dropping almost in every category. Majority of assets will be affected today. PPI, Fed chair speaking, that's going to affect all the US assets. Crude oil inventories are going to drop at 11 o'clock in 20 minutes. That's going to affect oil. So this might be the better play. GBP NZD. I never want to jump into any trade ahead of a news drop. So even though we got a bearish confirmation, I want to see what happens in the next 20 minutes. Could as easily just bounce off of the 20 EMA, push down, tap the bottom of the weekly range right here. Just right at the top of London range. GBP NZD continuing up. We're already at 0.5 standard deviations. Eighteen minutes till news drop. News drop in 16 minutes. Oil has begun the retracement back to the 20. I see us getting down here at least, or into the golden range, but more like pushing up after that. I think the news drop will either push us down, tap here, and we'll pull back up, or it'll hit New York fair value gap, tap the 20, and then push down. But again, we do not want to jump in before that news drop, which is in 15 minutes. It's the only news that actually really affects oil, crude oil inventories. And that's part of the game as well. Got to start recognizing what days to just avoid the markets altogether. As mentioned before, if you have that much news dropping, PPI, CPI, FOMC, non-farm payroll, Fed chair speaking, crude oil inventories. We have 3 of those today. It's best to just avoid the markets altogether and or try out the Asia session, London session. By that time, all news will have passed and you won't get caught up in all the gesticulation back and forth. GBP NZD, I'm not liking the price action on it right now. As mentioned before, it's a nested model, which is actually the lowest probability model. It's mean reversion. Price is going to keep coming back to the midpoint. Dropped, hit it, dropped, hit it. And then, as mentioned before, Thursday's footprint brings us back to usually the weekly range, marked out here with the aqua line. So we would have liked to seen a bearish confirmation, but now we have a bit of a mixed bag because we're bullish across the board, except for 4 hour, which is fine. We have a bullish confirmation, so we might just push away from the weekly range. I want to see what it does down here. This is my fair value gap of interest right now. That's where the 20 EMA is sitting. We could just, as soon as the 20 EMA pushes up, we'll take a look at the next fair value gap. Always have a pip calculator ready, guys. You can download one, you can just use one online, just Google it. There's many free ones. So as we jump from asset to asset, you should know exactly what your lot size is. Lot size changes depending on what asset you're trading. So right now, this is my fair value gap of interest. That's London's fair value gap. That's extended through. So if we tap here, that would be London's fair value gap, 20 EMA, and this fair value gap. That's where I'd be interested in at least looking. Crude oil inventories drop in 12 minutes. We're just going to wait. We do have a bearish confirmation. Higher time frame is bearish. 1 minute is still red. So if we were going to do a counter trend trade, we want the 5, the 15, and the 1 to be green. We're above the 238. Again, another sign of bullishness. We could just drop to the 61%, which is past 1.5 and 2 standard deviations. So this could be our bearish move, like aligns with our confirmation. We do have a red box. The only thing is we have a contraction model. Usually in a contraction model, New York likes to take out both sides, but we're pretty high up here. I don't think we'll take out London lows. I like the fact that we have a lot of confluence down here. If crude oil inventories wasn't dropping in the next 10 minutes, I'd even be interested in taking a sell right here. Because we have the bottom of the weekly range, we have the 238, and we have the golden zone 61% to 71%. So I can see it hitting here. That pushes us past 1.5 standard deviations. And we're bouncing right now off the dealing range, the bottom of the dealing range. In cases like this, when we're below the 50, we don't necessarily have to get all the way up to the 20. We can use the 50 as our rejection point. So there's a lot of confluence here. We have 1 candle, 2 candle, 3 candles right here, rejecting off of the dealing range. As mentioned before, news drop in 10 minutes, and our news drop will most likely even take us there. But again, on days like this, it's better to be safe than sorry. Today is a pretty heavy day as far as news. That decreases our probability and increases the chances of gambling. That's when people go full tilt. I'll use the top of this candle right here. That will give you a 8.64. GBP, NZD, now close to that fair value gap of interest. We're right in London's fair value gap, 20 EMA. Oil's already gone 1 standard deviations. News drop in 8 minutes. News drop in 8 minutes. We have now actually hit the 20 EMA. GBP, NZD. I want to see what happens. Let's see if it sets us up. Green across the board right now. Let's drop in a fib here. See what levels we're at. Close to the golden zone, 61% and 71%. There's Asia's fair value gap. And this tiny little green line here, you can see it. That's our New York fair value gap, this green line. made by this candle wick, this candle wick. So that little sliver, it could tap that, bounce off the 50, off the golden zone. Looks like it's setting up, we're just waiting. Crude oil inventories drop in 6 minutes. Let's see if it brings us down here to our golden zone, bottom of Tuesday's, the weekly range, the 238. Still no turnaround, still no sign that GBP NZD now wants to reject and push up, but we're just watching. This is the zone. Make sure you align the ticker with your broker. As soon as you hit search, either here or add to your watch list, whatever asset you put in, whatever ticker you put in, make sure on the right hand side you can see exactly which broker information they're showing. So make sure your brokers align. That way your spread is taken into consideration. Oil, news drop in 5 minutes. We're slowly pushing down, still heading to that weekly zone. Finally getting a green candle here in 4 minutes. We'll see if this closes green. And if GBP NZD wants to push up from here, we're in the golden zone. We're in our fair value gap of interest. We're bouncing off the 20 EMA. That's a big, big move. I want to see some confluence on other time frames. Remember, match the 1, the 5, and the 15. Don't just look up in the right corner. As mentioned before, today is Thursday, and Thursday does bring us usually back to Tuesday's range, so we want to be very careful with how we proceed. Still waiting for a foothold on GBP NZD. Crude oil inventories in 3 minutes. Still nothing from GBP NZD that makes me interested. I think it wants to push down a little bit more, but we'll see. Hasn't created any foothold yet. And sometimes it never does create a foothold. That's just the market's way of not letting you in. Remember, we wait for not only rejections, but we want to see these fair value gaps forming. That's our foothold. If it doesn't form one, we can't get in. And if it doesn't form one, that's the market's way of showing you that price action has already been delivered to. It's a complete price action, meaning it could push down even further. It doesn't want to leave any fair value gaps. We're getting a big move on GBP NZD. Again, still nothing, no foothold in there. Crude oil inventories in 2 minutes. Still no foothold on GBP NZD. I feel like it's close. See if it wants to make one though or not. Let's see if that sticks. Still waiting. 29 seconds. I want to see if this holds. News drop in 7 seconds. Crude oil inventories. All the way back up. This is what I mean. If it was any other day, that would have been an interesting play. But that's what it does. It takes us all the way back to the New York Fair Value Gap. Now, if we get this rejection from here, that would still probably be the play down. I want to see if there's an actual proper rejection happening. And that, ladies and gentlemen, is why we wait for news drop. GBP NZD did tap our foothole. I'm interested. Remember, if you're following along with this, make sure you do in a demo account. This is for educational purposes only, especially on a day like today. As mentioned before, we have big news drops. Fed chair speaking later in the afternoon. We had PPI drop at 8:30 and crude oil inventories. So right now we're rejecting off the weekly range, that aqua line, the top of it, and we're most likely heading down to the bottom of the aqua range. But we want to see where this candle closes. We want to close below the 50 and below the dealing range right here, the gray line. That would give us a good indication that this thing actually wants to push down. Remember, our higher time frame bias is still bearish, 4-hour and daily. Our 1 minute is bearish, but we want to see this crossover of the the 20 and the 50. So our 5 turns red. And as far as GBP NZD, I want to get over this fair value gap, this inverse fair value gap, and use the consequence encroachment to push up to even top range. Top range gives us 3. We don't have to go all the way to 1 standard deviation. One minute 48 seconds for this candle to close. We bounced off the New York fair value gap, consequence encroachment. We're below the dealing range. We have a bearish confirmation. GBP NZD, 24 seconds for this candle close. I want to see, as mentioned before, I want to get over that inverse fair value gap, use the midpoint consequence encroachment as a rejection. I want to see it push up. Oil back at the bottom of our dealing range. Candle closed inside the dealing range. We didn't quite hit the 61%. Bottom of the weekly range. I'm still more interested in seeing this eventually push down. I want to see it bounce off the weekly range again. So we're getting some more rejection. That would be the play on GBP NZD. Bounced off our fair value gap. We want to get on the other side of the consequence encroachment of this inverse fair value gap, and we're only going to the top of the range. And remember, once we hit 2 standard deviations, we move our stop loss to break even, and we take some partials. So 2 standard deviations is roughly here. Just mark that off so we know where it is. Oil, 2 minutes left in this candle close. We're bouncing off the weekly range again, the top of the weekly range on the other side of it. No footholds have been made here yet in this big wick. GBP NZD just gesticulating, but we want to get on the other side of this. Another great foreign pair to take a look at, usually when there's heavy news drop, is the Australian dollar against the New Zealand dollar. That's a market that kind of stays tight, as those two currencies are usually pretty neck and neck. A lot of back and forth, but you can always find a trade as soon as you get a confirmation. Still gesticulating in the area. Coming back to test that fair value gap one more time. Remember, one of our rules, once we're in a high probability trade setup, we don't want to stay in the same zone too long. The longer price stays, once it's delivered into a fair value gap, it should move quickly. You should see a displacement, a big candle. The longer it stays in a zone, the lower the probabilities become. And it's more prudent for you to jump out. We're still within the range though. If I see 2-3 more candles just staying right here below this fair value gap, then it'd be in our best interest to just jump out at break even. Finally, a big move in oil, creating a foothold. Right in that region. About 19 seconds left to see if that foothold stays. Three, two, one. So that's the foothold. We want to see price remain below this. Head for that. Finally getting some movement out of GBP NZD, but we want to get over this inverse fair value gap as quickly as possible. We do not want to stay below it. Otherwise, it could use the consequence encroachment of this to just push down. Here's a big fair value gap. It could use that to push down. But we want to displace through this as quickly as possible. We're green across the board. Bullish confirmation. The only thing that's going against our confluence right now is the fact that our weekly range is below us. And we do have a nested mean reversion model, which means price just keeps coming back down to this green line, the midpoint of all 3 sessions, in which case it just keeps taking liquidity on both sides. It's not what we want to see. Oil now slowly pushing. Since oil's already delivered up here, we're forecasting oil to come all the way back to the weekly range at 238 in the golden zone. Take out this liquidity. GBP NZD, still gesticulating in this area. We've got 15 minutes left in our stream. If we don't get a push in the next candle or two, we'll break out at even, or sorry, we'll get out at break even. We want to see displacement. We want to see movement. The longer it stays in a zone, the lower the probabilities. It's already delivered here. Oil continuing to push down. GBP NZD still gesticulating. So if this candle closes in the next 4 minutes and we are still stuck in this range, we'll most likely just get out at break even. Oil, on the other hand, pushing down to our 61% weekly range, 238, this zone right here. I'm aiming for just the 1.5 standard deviations, even though we most likely will hit the weekly range, the gray, or the aqua line. But that in itself that gives you more than your 1 to 3. So we got 3 minutes left. If I don't see this candle push past this inverse fair value gap, I would most likely just get out at break even. About 13 minutes left in our stream. Let's see if we can't get all the way down here and push all the way over here in the next 13 minutes. We want to be out by noon. If we're in a trade, we want to be out by noon if it hasn't hit our TP, but you want to make sure that it's at the very least hit your 2R. So here it'd be 2R right there. Here again, just the 1.5. That way you know you're in a safe trade. You've already moved your stop losses to break even. You've taken some partials, and then you can let the rest ride. So even if it goes into noon, it's fine. But ideally, we want to be out by noon. We got 1 minute 56 seconds. If this candle does not get over this inverse fair value gap, we will get out at break even. Oil having a bit of a pullback, which is fine. 1 minute 25 seconds left. Now remember, we're always looking at these assets on multiple time frames. So as far as the rule of fractals, it's going to fill in the same fair value gaps or create fair value gaps on the 1, the 5, and the 15. So right now, 1 minute, 4 seconds left. Let's come back into this fair value gap. $45-47 seconds left. This market does not push past this inverse fair value gap by this candle close. I will get out at break even. I recommend. That's the better move right now. And this thing could push past this, but on a mean reversion model, there's no point. We want to see displacement. We don't want to see this much consolidation and gesticulation. It's just, that's the market's way of testing your patience, but in reality, the probabilities decrease. As mentioned before, the closer we get. We want to be in a high probability trade setup 1 hour after the range formation. That puts it at 11:30. But keep in mind, if you're in a trade setup before that time and it hasn't pushed by 11:30, it's the same thing. It's the same rule. You're not really in a high probability trade setup if it hasn't actually pushed. We are getting a push here now. This is off our new candle. I'd rather just break even and be out. It's going to have taken its time to get past this inverse fair value gap, which means that it could actually just use this to push down, head towards our weekly range. We never really got the displacement we were looking for. And the funny thing is, you might get it on this next candle or this next candle, but lower probability. Remember, we are high probability traders, 70% or higher. The longer it stays in this zone, the lower the probability becomes. If I'm in a trade setup, if I jump into a trade setup and I think it's 70%, and all of a sudden it drops to 40%, I'd rather just jump out. So we'll keep an eye on this market, but we're out a little bit in profit. Keep in mind, if you're following along with us today, do so in a demo account until you've mastered the strategy and understand the strategy and you're able to make these decisions on your own. You should not be trading in a live account. And there you go. That could be the push. Or we could continue to just bounce off of this. There's no FOMO here, though. These trade setups happen every single day. Multiple times a day. 3 sessions. New York, Asia, London. Oil taking its time. We're at 1 standard deviation. But we are at the bottom of the range. We're outside. Still targeting 1.5 standard deviations. Most likely the aqua line there. Bottom of the weekly range. GBP NZD finally doing its push. Look how long it stayed in that zone. 1, 2, 3, 4 candles. And still having a tough time getting over the consequence encroachment of that inverse fair value gap. Either way, they should have got out at break even. Oil now slowly pushing down to 1.5. And keep in mind that is the target. So the target's been hit. We are predicting that it goes to the weekly range, and that's where it usually goes. There's a lot of points of confluence here. The 238, it's going to tap. It's going to want to hit 61. Mostly these two. Fibonacci is really just here to help us kind of find these points of confluence. But we've already delivered to 1.5 standard deviations. And now, let's see if we can't just finish this off and tap the aqua right before 6 minutes before our session ends. And there you go. That's been delivered. This is just gesticulating and wasting our time. So you should be at least in profit or break even here if you got in right here at the fair value gap. This thing will most likely push up, but again, just a waste of our time, especially if this has already been successful. We still have 6 minutes left. We'll watch, see where this goes. The other thing that stopped me here, as mentioned before, is we have a mean reversion model, meaning that the market is drawn back to that green point. This is my least favorite model. And given the fact that today is Thursday, and Thursday as we've seen here, likes to deliver back to our weekly range, the aqua line. And GBP NZD's aqua line is down here. Hasn't even tapped it during the entire New York session. So there's still a chance that it could bounce off that, use that inverse fair value gap to reject and continue down. That's why it should not take this long to get past this fair value gap, this inverse fair value gap. Because even beyond this, there's a bigger fair value gap right here that we're bouncing off of technically right now. And it could just continue to bounce off this and push down. That's why you want to be very, very cautious. Ideally, if our weekly range was above us and we had a upside expansion model and we're green across the board, I wouldn't have any hesitation. Your confluence has to match up, that's all. But as mentioned before, you should be in profit at the very least. So make sure you guys check us out on fractaleffects.com. Please check us out on Instagram, fractal.effects, where we drop a lot of educational material. And in case you ever see any kind of delay on our live feed, or if you don't see us on live when we're supposed to be, please check over on our Instagram. You'll see a message. Please hit the subscribe button, turn on your notifications so you know when we're live. Currently we're live Tuesday, Wednesdays, and Thursdays. So we'll be back on again next week. And again, we are getting that rejection now off that fair value gap, off the inverse, off the consequence encroachment of that bottom part of that fair value gap. We've still got about 3 minutes left. I want to see where this candle closes if we continue pushing down. And you also have to be flexible. You have to train your brain, neuroplasticity. You have to train your brain to be flexible. You have to be able to make decisions right in the moment. And that just comes from time and practice. Remember, timing the market is not as powerful as time in the market. When you have that practice and you have that pattern recognition, that's how we want to see that displacement candle. We didn't get it. Once it's delivered, it should not need to stay there. The only reason they're keeping it there is to engineer new liquidity and build both buy and sell orders on both sides, and then they're going to run one side or run them both. Because they could build it right here, take out the lows from here, and then continue up, or take out the highs and then continue down. And that's just annoying. So we avoid that. We avoid that sloppy price action. About 2 minutes left in our stream. Now that oil is delivered here. Let's see if it goes all the way down and takes out London lows and continues on its higher time frame bias, or if we get some kind of a rejection from here. GBP NZD still rejecting off the consequence encroachment of that fair value gap, and it'll most likely gesticulate here because we are above the 238. We are green across the board. So whatever move it's going to make, it'll most likely make it past our actual point of entry anyways. It looked nice, as mentioned before. I just don't like the mean reversion model. Make sure you understand all the models. That should be seared into your brain. Make sure you watch all the videos on the Learning Hub. It's only 2 hours worth of content. You could learn the entire strategy on a weekend, practice in a demo account for a month, join us live. and you're on your own. You're able to make these decisions and figure this stuff out on your own. And that's where you want to get to. Too many people stick to these live streams. I need somebody else live. It's good to have a community, that's fine, but you should be able to see these setups on your own. You don't want anybody making these decisions for you. God forbid if something happens to whoever you're following. You should be able to do this the next day on your own.